trader that shorted Bitcoin to the very last minute before Trump tweeted what a lot of people are saying is Baron Trump. He's shorting again, or she's shorting again. And while that is interesting, some people are just taking it at face value. The market's going to go down. We actually see the market edging higher. I want to explain why this could actually be a counter trade, why you should not follow this person necessarily. We'll also be going through what's happening in the market today. We have Tom Lee talking about the market and the recent dip. We have Larry Fink talking about Bitcoin on 60 Minutes. We have President Trump with updates on China, Bitcoin, a lot of stuff to cover. If you don't mind though, hit subscribe so you can see future videos just like this. Turn on the bell notification. We are posting all on Friday. We posted over the weekend too when there was news to be updated. And if you do want to trade, check out BYDeFi underneath the video. You can start trading in just a few minutes. We have 2 bonuses going on right now. So typically this is a better bonus than just about any exchange gives. A $13,000 bonus up to $13,000 just for trading on the platform. And this is for everyone that's ever signed up. It's not just new users. Then we're also doing a deposit bonus event as well. You can check out more details in the Telegram. I have that linked underneath the video as well. 3rd link down, 2nd in the comments. But we have a double campaign going on right now. So if you want to sign up, deposit some money, start trading, now's a great time to do it. Get a secondary exchange because all the exchanges went down, it seemed like, during the crash. I will apologize. I sound a little bit tired. It's been a long weekend of fun and then a long night of staying up with the baby. So I apologize for that. But let's be honest, I don't usually sound that energized anyways. So let's get into it. We have Bitcoin climbing back up today. 115,000. It went up to almost $116,000 just a few hours ago. We have Bitcoin dominance coming slightly back down. Altcoins starting to, have a little bit of life in them once again. The traditional markets look good too, with the Nasdaq up about 2%, gold up 2.8%, well over $4,100 once again. The VIX going down 10%. So what exactly is happening? Well, over the weekend, it sounded like Donald Trump was basically stepping back some of the China talk. Said, don't worry about China, it'll be fine. We have Vance saying that we appreciate the friendship between Trump and Xi, all this stuff. So basically, walking it back, we may still see tariffs, we might not. There's no way of knowing right now. Trump likes to throw it out there, then negotiate. So the market is realizing, hey, this isn't like this catastrophic issue that is 100% happening. No, there's like I think Polymarket put it an 11% chance that we see those tariffs hit on November 1. A lot of people were also worried that crypto is going to have a very bloody day today or over the weekend. There's this rumor mill saying that 2 large trading firms were liquidated to zero, saying that they had a book of top 100 market cap tokens that were collateralized against each other in size like $1 billion plus and became sellers of their entire portfolio. I heard a lot of other crypto companies were possibly bankrupt and might have to liquidate today. Of course, that could always happen. That's kind of what we saw back in like FTX Luna collapse. But that's not happening right now. Like, we're not seeing altcoins fall another 30-40%. No, we're actually seeing the market do fairly well. I've opened a couple trades, to be clear. Last week during the crash, I opened up this 5X on ETH. It's up 64%. Yesterday or the day before, I opened up this SUI trade. Just be careful. I was rushing on my phone and I accidentally hit cross. So I stick to isolated margin, so I'll probably close this nice 35% profit in a very short period of time. But be careful with cross margin. That's how a lot of people can get liquidated very quickly. But I didn't want to close it before pointing that out, because even if you trade a decent amount, you can still make small mistakes if you're not sitting down and really reviewing your trades ahead of time. Now, the trader who made $191 million shorting Bitcoin just moments before Trump's tariff news, obviously also manipulating the market there, just opened up a new $161 million short. That was actually on Sunday, I believe. And then they added more money today. So they added another 46 million. Now, we were talking about this in the Telegram whale chat. And a lot of people will take this and say, well, obviously this person knew there was something big happening. on Friday. They shorted the market at the perfect time, so they probably know something big's going to happen right now, right? They probably know that the market's going to go down. So there are some people that are now shorting the market or selling their crypto because they think it's going to get worse. Someone asked me in the Telegram whale chat what I thought about this, right? Is it a sure indicator that we're going down? And I basically explained, no, it's not a sure indicator that we're going down. This person has the attention of the entire market. These are not the only tweets talking about this Bitcoin whale shorting the market. No, it seems like every big crypto news Twitter account or X account is talking about this. So now everyone's thinking that the market's bound to go down. This person, right, we don't know who they are. They could have, it's $208 million shorting the market. They could also have other accounts that they're using to go $400 million long, right? And they can know that there's something bullish happening. And they could point everyone here, right? So everyone shorts the market or sells, then they buy back lower, or they open their long position. The good news comes out, and then they make money on the upside. So they're basically flashing this account or this trade that they have. Yeah, everyone look over here, get everyone bearish. They maybe make money from that, and then they're actually trying to go long the market, right? After enough people follow trades like this, they can make money just from showing what they're doing, right? Just like ARK Invest, whenever they used to buy a stock, it would go up like 20% the next day, right? And they could make money without even being right, really. So I'm not saying that we're going to go down. I'm saying that there's no way of knowing what their true intention is. Like, they might short the market and really have money somewhere else along the market, and they just want to throw everyone off, right? So I'm not blindly following this. I think it's something to pay attention to, but yeah, like, this is the 150 IQ play. It's just to do the opposite of what now everyone's looking at, and then screw the market that way too. Hope that makes sense. What's really important is what's happening behind the scenes with the large and wealthy investors, not just some trader, right? Trump is reportedly one of the largest Bitcoin holders in America with 870 million in Bitcoin exposure. Honestly, he probably has more than that in wealth that is created directly from crypto. Like, he has crypto related companies that have value that aren't just the amount of Bitcoin held in them. For example, they're creating a Bitcoin ETF, right? He doesn't own that Bitcoin, but he's going to get reoccurring revenue from it. I think this is going to only go up from here too, because he continues to increase his allocation towards crypto. And that's just Bitcoin, right? That's just Bitcoin. That's not all of crypto. Tom Lee's BitMine bought 129,000 Ethereum after the market crash. Strategy just acquired 220 Bitcoin. So not a ton of Bitcoin, but still $27 million. Nothing to scoff at over a week. Pretty small for them, but big overall, obviously. BlackRock CEO Larry Fink just talked about Bitcoin on 60 Minutes. We'll play this. We'll also go through what Tom Lee is seeing in the market right now.
I did say Bitcoin, because we were talking about Bitcoin then, was the domain of money launderers and thieves. But, the markets teach you have to always relook at your assumptions. There is a role for crypto in the same way there's a role for gold. That is, it's an alternative. For those looking to diversify, this is not a bad asset, but I don't believe that it should be a large component of your portfolio.
Now, bears will say, well, he said it shouldn't be a large portion of your portfolio. He can't come out and say you should have 20 or 30% Bitcoin, right? Like, this is the largest asset manager in the world, the CEO of the largest asset management company. He can't come out and tell everyone to go 30%, right? I mean, he can maybe say behind closed doors or tell other people to say to go more aggressive. But I still think it's a glowing statement, right? I mean, he's comparing it to an asset, the largest asset in the world, I guess, besides real estate, debt, that kind of stuff. But like, if you're trying to buy something and you want it to be pretty uniform, right? Like a trading vehicle, gold is the largest asset. It's $27 trillion now. And he's comparing Bitcoin to gold. We've come a far way in a very short period of time. So yeah, the markets are looking good. The Nasdaq's up 2%. Bitcoin's moving up. We could hit new all-time highs, just like I said on Friday. If you had the kahunas, if you had the wherewithal, the resolve to go in and long the market or to go buy the dip, like you've done really well. I said you could make a lot of money from this. I opened up a couple trades myself. We're doing well on those. Now, what does Tom Lee have to say about Friday sell-off? Let's see.
Bouncing back after Friday's drop, joining us now, Tom Lee, head of research at Fundstrat Global Advisors. And
now I did play a video because he talked on Friday. I played a video, I think it was Saturday, saying where he said that we could see more of a dip on Monday. That could kind of be the bottom. Let's see how he responds to that, if that's what he says now too.
And Fundstrat Capital CIO. Tom, just summarizing what your thoughts are this morning. I don't see a whole lot that has shaken your confidence that the market's headed up. You still see 7,000 on the S&P by year end. You do point out it's not cheap, up 36% since the April lows. You do outline some headwinds, but I think you're outlining more positives than negatives for the markets, even right now.
Yeah, in fact, I think JP Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas. And at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. And I know there's a lot of talk about bubbles, but I think the thing I would just continue to point out is NVIDIA trades at around 27 times forward earnings. It's still on a PE basis cheaper than Walmart and Costco, which trade at around 47 and 34 times forward earnings.
Yeah, you've got positive reasons to think that earnings are going to do well in a time when interest rates are coming down. So that's just like an elixir for stocks that is very powerful.
That's right. And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1 month median return is almost 3% of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November.
Still got, we're not overly positive in terms of sentiment right now. So that's not late cycle, according to you, at this point. And still a hated rally, $7 trillion on the sidelines. If people decide they want to go into stocks.
Yeah, I think conviction is a measure of whether or not the market is, pricing in too much good news. I think with Friday's sell-off, I saw many people calling the top of the markets or declaring that the bubble is bursting or that, this is the reason to be buying gold. And if investors are that quick to call a top just on a 2.7% decline, I just think a lot of good news isn't really priced in. I think there's still a lot of reluctant investors on the sidelines.
Yeah, we have to remember, crypto did poorly on Friday, and it was one of the worst crashes in history for altcoins. But the traditional markets, while having a bad day, were near all-time highs the day, at the beginning of the day or the day before. So it was not that bad of a day, and yet people are still ringing the bell that the market's over.
You have found a kind of everything's about crypto. You found a reason gold's up, and it's because of crypto. Not directly because of crypto, but you think the incremental buyer in gold there's gold-based stable coins, and people need to buy gold to back the stable coins. And that, you think that's enough to be up $92 all the way up to a new high?
Well, there is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago, and that corresponded with gold essentially going up every day. I'm not positive of this, but I think stable coins, including Tether, may be one of the largest buyers of gold today.
That's perfect. So the people that have been bullish on gold for so long and bearish on crypto and Bitcoin, they're finally getting their big rally in gold, and it's because of the thing they hate so much, crypto and Bitcoin.
Yeah, that's right.
That's so funny.
Tether is proving to be a good meeting ground between Bitcoiners and gold people.
Tom, can you just explain, though, to the extent we can understand it, within at least the Bitcoin world, just how much leverage there is in that system? Because I think one of the things that we were looking at Friday was the possibility, at least, that some of that selling, or maybe even a lot of that selling, came from margin calls at that time.
Andrew, there has always been a lot of leverage in crypto. I think that the volatility and leverage is what has drawn people into that space, especially when you get outside of Bitcoin and Ethereum. Those two are generally not held on margin. I mean, there is some leverage with what they call perpetuals, but that's why they held up so well over the weekend. But this liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. Essentially, you have to go back to FTX. I think there is a lot of leverage in the way people use this product called perpetuals, which is trading on margin, like 3x, 20x. And it lurks and it's held through collateral. People like sort of pledging something that thinks it's safe, but when the price of that collateral drops, it triggers a cascade. Right. And so I think people talk about this thing called auto deleveraging. So a lot of leverage, yes.
Can you just sort of step back and explain that again? Did you say 20 times?
Yes, there is this very popular trade in crypto called buying a perpetual, which is not necessarily buying the crypto itself, but buying a synthetic version of it with leverage. It was originally created by BitMEX many years ago, but even exchanges like Coinbase offer this as what they call like a 20x or even 50x leverage. So with 5 cents of collateral, you can buy $101 worth of a crypto. Now that's fine if someone's a really good trader. But of course, as you know, if something moves 5%, right, that collateral is lost.
I feel ignorant because I don't think I appreciated we were talking about 20 or 50x leverage. I mean, that's in a whole other realm. What percentage of the market do you think that makes up in terms of a share of what's happening here?
I think most buyers of Bitcoin and Ethereum are cash buyers because Bitcoin is $2 trillion. And you wouldn't be, you'd see that much leverage if it was out there. But for the active markets, I'm going to guess it's 5% of all trading is with perpetuals. But as you know, that's a lot of volatility, and it's triggers what we call collateral cascades, and that's what happened over the weekend.
Does that worry you, Tom?
Oh, yes. As you know, Warren Buffett has said, derivatives are the weapons of economic mass destruction. There's a lot of leverage both in the traditional financial world with structured notes and equity derivatives and private credit, and there's a corresponding system that exists in crypto. But I think that's why most people who own crypto should view these events as a lesson in leverage, number one. But two, as we know, volatility like this really gives an advantage to an investor because someone got a chance to buy Bitcoin at 107,000 and Ethereum at 3,600, and Ethereum's back to 4,200 now.
So how do you protect yourself? Do you have leverage? And what would you suggest to other investors who are watching right now?
Well, as a first principle, BitMine, which is the largest holder of Ethereum in the world, doesn't use any leverage. It's a fortress balance sheet, taking a page from Jamie Dimon's playbook. Large holders have a responsibility to have a super clean balance sheet, and that's a first principle of BitMine. I think most people I know in crypto do not use leverage because they've lived through those systematic drawdowns. So I think most people who have a lot of experience avoid leverage.
And we got to go. You point out we're not getting any economic data, but there's other places to get some of it. And at this point, the shutdown's probably, friendly for inflation and not great for employment. So the Fed, there's no reason for the Fed, not if they're going to ease, there's no reason from the shutdown. It makes it more likely to continue with that cycle, I think is your point.
Yeah, Fed Chair Powell speaks this week, and I think that he's going to lean dovish.
Okay, so there's a lot of interesting stuff that Tom Lee talked about there. I mean, it's fascinating to see that a lot of people, even on CNBC, don't understand what's happening with leverage in crypto, right? Like Andrew here didn't know that there are people trading on 20x leverage. There are people trading on 80x, 100x, 500x. It's insane when you break down how aggressive you can get, which is why, on this channel, I do talk about leverage trading, but my trades are generally low leverage, right? I do have some maybe mid leverage. Some people would say like 7x, but the majority of my positions are 3x and 5x. And keep in mind, this is with a small portion of my portfolio, right? I keep it basically 5% or under leverage trading. Now, this is how I get higher alpha. This is how I get even better returns with part of my portfolio. And instead of trying to go find some small altcoin and buy it and hope that I don't get rugged and pay attention to it all the time, have to pay all the fees to get the crypto in the first place and spend all the time to do it. Instead, I trade something like Bitcoin with 3x, 5x, 7x, depending on how big a pullback we have. I might go more aggressive. If we're right at a support line, then maybe I'll get a little bit more aggressive, right? I have the ability to add more margin, so I might add, a couple $100 more to $1,000 trade, and that can lower down the liquidation price, right? So there are various ways that you can avoid liquidation or avoid having to lose your crypto if you're leverage trading. For example, just don't do cross margin. That kind of ties everything together. So if one crypto goes down, all your portfolio can get liquidated. Another thing you can do, you can make sure that you have margin, so you can add more margin to trades. You can use lower leverage. You can also have cash on the sidelines, which kind of goes to that margin ability, right? So I've always thought that having some cash on the sidelines helps me get through the volatility, right? Because then when the market dips, I don't think of it as, oh, I just lost a lot of my net worth. I think of it as, oh, I have the ability to buy an asset with the cash that I have on the sidelines. This is an opportunity, not a problem, right? So it is interesting to see Tom Lee talk about that. I mean, there are various ways that large companies can grow, right? Like you can use leverage. So you can get debt, right? That's essentially leverage. If someone has a revolving line of credit, right, as a company, they have the ability to get money from the bank, or they take out a loan to buy equipment. That's leverage, right? It's not the exact same thing as leverage trading. There are different pros and cons to it, but that's leverage. The other side is you can just go sell more shares, right? Like BitMine might sell some more shares or do some kind of strategy where they have like notes or something, or MSTR. What do? They have these different like perpetual dividend paying stocks that they sell, and then they take those proceeds to buy more Bitcoin. So there are various ways to get more Bitcoin and more Ethereum, and a lot of these companies are just looking at the best lever to pull, whether it's debt, leverage, etc. Of course, like MSTR, they might say, well, we're not taking on leverage, we're not diluting shareholders, but they do have this kind of obligation. They say that they don't have to pay the dividend, right? It's not a requirement, but it is if they want to keep doing this, they need to pay the dividend, right? So they have this new obligation to then pay out existing holders, right, of these different shares. So it is interesting to see kind of how they approach it on CNBC. Again, we've been able to make life-changing amounts of money. I mean, think about this, right? I started trading using leverage at maybe $25,000, $30,000 Bitcoin. I talked about on the channel, right? Back, it was actually, I think, August of 2023 and September. So we were around here. Think about that. Bitcoin at 25,000, we're at $115,000 now. Of course, I have open trades, closed trades, taking profits. I actually timed this dip almost perfectly because we flipped the prior resistance into support. So I was within $1,000 of the bottom on this exact bottom day back in August of 2024. I went very aggressive, like degenerate 80x. Of course, you can make a smaller position. That's what I did, right? Because I went 80x leverage. I also had a relatively small position. So I took profits on that because we went up like 1,000% in, I think it was like a day or two. And since then, we've been able to make tons of money. If, let's say you had a position that you opened at 25,000, you bought a Bitcoin. Now it's basically worth 5 times as much. However, if you had bought a Bitcoin at 3x leverage, you basically get 3 times the returns. Of course, there have been fees, funding fees over time. That would drain the position a little bit, but not that significantly, honestly, on 3x leverage. So instead of getting a 5x, you get 3 times that. So you get like a 15x. Maybe after the fees, it's a 14x or something over, because it is a 2-year period. But you have gotten a 14x instead of a 3x. It's a huge difference. So if you do that with just a small portion of your portfolio, it can give you outsized returns, like 5-10%. And of course, then you don't have to do all the work and the paying attention and the stressful stuff that you have to do when you have small altcoin positions. Plus, Bitcoin just outperformed basically everything. Solana, XRP, and maybe like 1 or 2 other cryptocurrencies might have done better over that time, but generally Bitcoin's beat out everything over the bear market. And with leverage, even if Bitcoin underperforms but still goes up, you can still get better returns. I think there's actually a smaller chance that you get totally liquidated, assuming you're not getting overly aggressive. Liquidated versus just like getting rug pulled in some smaller crypto. I do trade mostly Bitcoin. I don't really try to dive into a lot of small altcoins with leverage because like last Friday, they went down 80%. Even if they just go down 30%, but you're on 3x leverage, you're like right at liquidation essentially. So you have to be a little bit careful there. Let me know your thoughts on all this underneath the video. I think Tom Lee did a good job of describing leverage. And while he says that not a lot of very wealthy people use leverage, that's not really true. Like almost everyone that's become very wealthy in real estate has used leverage. Unless you just have a cash cow business, people use leverage all the time in daily life. Of course, using aggressive leverage on such a volatile asset is a whole different beast, but you can still use it appropriately in my mind. But of course, do your own due diligence. Let me know your thoughts on all this underneath the video. I'd say this market looks a little bit, I don't want to say dull, but like tame after Friday. We do have Tom Lee saying to buy the dip. Let me know your thoughts. Thank you so much. Again, check out BYDeFi, check out BTCC, BitUniX, WEEX, BLOFIN, get multiple exchanges. I do like BYDeFi a lot right now because they have that multiple event going on right now. They constantly run these promotions too, so you can continuously get paid. There's someone that got a $13,000 bonus last week when we closed this. So they got $13,000. There were a ton of people that got 170. There were some people that got 430. So yeah, you can get this bonus. There's a deposit bonus going on right now too. If you're someone that wants to connect with someone at BYDeFi, and maybe you have a question or concern, or you made a deposit and you don't quite see it showing up yet or something like that, we have them in the Telegram. There's a pinned message. So I think that's probably the most attractive thing about signing up for BYDeFi is there's someone at BYDeFi that can help you through. Like he was answering questions during the crash Friday. So that's like, you can't put a price tag on that. Thank you so much for watching. Appreciate it. I'll see y'all soon.